answer any questions you might have about your subscription or opportunities in the market. For those of you who are new, welcome. If this is your first live event, do me a favor, type in first. This is my brief bio. Disclosures are very important. Please read them. Trading stock and options involve risk, not suitable for everyone. You must be aware of the risk and be willing to accept it in order to invest in current market conditions. I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education information purposes only. Please consult your financial advisor prior to making any trading decisions. All right, before we jump into trading psychology, let's talk about current market conditions and see where there are opportunities in the market. So if you let me sign into my yellow tunnel account. Look at the aggressive power trader. So today, some of the signals, Apple, we've seen strong performance in Apple, utilities companies like Duke and Tesla. Spiders support is at 655, overhead resistance is at 66 for today. We're trading at 672. Market continues to grind higher. In the next few days, it does show you that the market is overbought, right? The market is overbought short term. Potentially in the next 3 months can continue to go higher all the way to 684 level. But short term, if you look at 1 or 2 months market, it does see that it's getting to the overbought levels. So I agree with the model. Let's look at spiders currently. So we're right at the all-time high, right? Just I don't know if you guys have any questions. So overhead resistance right at that all-time high. If you look at the interest rates, we do have kind of a pattern of lower highs and lower lows and broke through the important 4% level on 10-year yield, which basically shows we're right at the same level we were during the Liberation Day, right? First phase of Liberation Day back in April when we did have a pullback, more significant pullback. Basically, on one hand, this is positive that the yield is dropping and companies can refinance their debt. But on the other hand, we do have a yield flattening, which reflects current market environment, right? Uncertainty about tariffs, right? And with China, 100% tariffs is due on November 1st. Trump is meeting president of China, Xi Jinping, to talk about the tariffs, talk about the rare earth metals. So based on that outcome, market could rally or market could sell off. So at least the bond market actually shows there is more risk in the market than most people anticipate. VIX did drop. We had a pretty volatile last week. We're as close as 28 after the escalation in the rare earth metals and United States retaliating. Then we had regional banks exposure to some of the credit risk. And we had a pretty sharp sell-off in regional banks last week, right? So kind of reminded of the Silicon Valley Bank back in 23, right? And then the government shutdown. So still a lot of uncertainty in the market, and people are cautious, right? You can see the same price action today in silver and gold, right? You have these vertical moves up because of the uncertainty, and now vertical moves down, right? So very volatile precious metals market, something I would also keep an eye on. So what's next, right? What's next? So let's look at the spiders. Right, there are two scenarios, right? We can have a breakout, right? The question is when. At least according to our model, neural network model for spiders, not for the next couple months. And you can go to an AI analysis type and any stocks like NVIDIA or any stocks, and it will also give you predictions for the current session, right, and for the trend. So if you look at how everybody else positioned, right, going back to game theory, right, and how everybody else is positioned, let's make this a little bit bigger. So I'm now looking at the SPX data, and I'm looking at the options position. SPX is the most liquid name, and we have more people attending. So let me just welcome some of the other more people joining. Thank you for joining. Chuck, welcome back. How are you? Let me know if you have any questions. So you can see that the flip point is at 6,600, and now put wall and call wall is at 6,700, right? So the largest position is, let's just change this to 50. Right, the largest positions right now is a 6,700. That's what used to be overhead resistance. Now is the support, as we broke above that for a couple of days, and then the next level is 6,800. And on the downside, you have 6,600, right? The put and call wall. So that's where, very large position. So let's look at the end of the year. So there's not a lot of position in November, so I'm not sure how relevant that is, but still there's most of the position right now is in December, right? Most of the position right now in December, you can see, if you look at different expiration months and where all the concentration of puts and calls, open interest, it's right at the December level, which is, pretty significant, around $90 billion. So people basically hedging the uncertainty that's coming, deadline for tariffs on Mexico, I think takes into effect November 1st, with China November 1st. So if there's any negative news, then I think, people can be caught by surprise, right? Because there's not a lot of position in November. December pretty well hedged. So we'll see if that's going to be enough support or not. So if I just look at the November and December expiration, thinking about going into the end of the year, you can see in terms of position, you have one is 6,900. So one scenario by November and December, we're at 7,000, right? We talked about 7,000 before. Let's draw that out. So one is that we are at about 7,000, right? We're trading beyond one standard deviation move, right? Maybe because of the, positive earnings, strong earnings momentum. We're in the middle of the earnings season. Tesla, Netflix is going to announce earnings this week. Maybe we reach an agreement with Mexico and China in terms of tariffs, right? So de-escalation. Inflation is down, and government at some point will restart, and we'll get the inflation data and unemployment data, and then we have scenario number one. Scenario number two, we're trading in this range, right? Somewhere between 6,800. There's a lot of overhead resistance at 6,800. So somewhere in this, maybe slightly higher, 69, I would say somewhere here, 6,900, and then last week low, 6,550, 6,500, right? And I'm looking at these bars. So this is basically one standard deviation moves based on the supply and demand for options contract. So that's scenario number two, right? That we're kind of stuck in this range. We've been trading it for the past couple of weeks, and for every good news, there's a bad news. So we're trading in this range, maybe 6,800, maybe 6,900, and 6,500, 6,400. And scenario number three, we're revisiting, we break through the 6,400 level, and we're close to 6,200, maybe 6,000 level on SPX. Because, one catalyst could be, at least I think the one that has higher probabilities is that we don't sign an agreement with China, right? Or government shutdown, goes into the next year, something along those lines. So how many of you say one? Lalit, welcome back. James, Chuck, Charles, Fred, Michael, welcome back. How many of you say scenario number one, higher highs, higher lows, strong earnings. We have earnings from General Motors, Triple M, General Electric. So banks are doing well, industrials are doing well. Halliburton today up 10%. Consumer staples Coke is doing well today after the earnings, and then we're going to start having the heavy tech companies, Netflix, Tesla, and then Apple, Microsoft. So then scenario number one, scenario number two, we're trading in the range, number three. So how many of you say scenario number one? James, scenario number two. Thank you for letting me know. Chuck, what do you think? We're trading range bound, 1, 2, 3. Donald, welcome back. James, Lalit, Fred, what do you guys think? Chuck, why? 2. Okay, 2, 2, 2, 2. Okay, well, perfect. So most of you said 2. I'm also going to say 2. I think as a nice round number. If we see a 7,000 print in December, I would not be surprised, right? But there's still uncertainty in the market, so I think we're going to continue to make new highs incrementally, and I would use pullbacks as the opportunity to go long. Short term, I think we could see bigger drop, right? I think we had 65.50 low. If I see 6,400, I would not be surprised because of the geopolitical risks. So how do you take advantage of that information? Right? So I mean, right now, short term, maybe till November 1st, until there is a resolution, I would be maybe market neutral, maybe slightly bearish, right? But market neutral in your portfolio. After there is clarity, right? And most likely, if I have to guess, most likely there will be some kind of either extension of the deadline or some kind of an amicable solution. But we'll see. That's something that's very hard to determine. So I would be short term, maybe be market neutral, and then November, December, from seasonality point of view, very bullish time of the year, then I'd be maybe more aggressive, right? So it was the idea, at least until we break through this level, right? This is the top. It's probably here to stay. I mean, we could do marginally higher, but the question is, do we still have at least retest of the 50-day moving average, right? Kind of A, B, C, right? Is there wave C? Well, we'll see. But until we break through the high, you assume that this is your resistance number one, right? The all-time high, and then support is the 50-day moving average. So how do we help on yellow tunnel? So we have different services. I already covered aggressive power trader. You can go look at the aggressive power trader. You can type in any symbol. If let's say Apple, right? Apple was one of the signals this week, or let's say Amazon. I have an Amazon position, but it's not part of a aggressive power trader. Then you can type in the signal stock that you're looking for, and it will give you basically support and resistance for today, right? If you want to buy and it's already at 222, maybe you're a little bit late, right? For day trading or short-term trading, maybe it makes sense to wait for a pullback. And it gives you prediction for the next 2 to 3 months. Potentially can get to, what does it say? 236, right? 238 after earnings. We're approaching earnings. So you have short-term prediction, long-term prediction, and optimization, right? Data entry. Entry into position is extremely important, right? Optimizing your entry points. There's a difference between the low and high, in this example, more than 1%. So if you can save even 0.5% every time you enter or exit position, that alone, I think, something to always be conscious of, right? That you don't buy, when the stock is overbought, and you wait for the pullbacks, right? You wait for these pullbacks. So that's aggressive power trader. We give you some of the stocks like Apple, right? You can look at the you can do option trades if you feel more comfortable doing option trades. Then you can look at the Friday's expiration. If there's no Friday expiration, you can look at monthly expiration, November, or go 2 weeks away if you want to leverage. But the idea is the same, If you want to buy Apple, 241 is your support, 252 is your overhead resistance. We're actually at 263. So Apple continue to grind higher. Let's see. Yeah, Apple just continues to make new highs. So that would be some of the signals for Apple. So Apple, Duke Energy, and Tesla, right? These are all stocks that give you specific entry and exit points. Any questions? What else is here? You can participate in live trading room, and if there's any trades that I did in these stocks, then you can see orders in position. Similar, we have weekly power trader. Weekly power trader. This model, aggressive power trader model, runs every day. Weekly power trader model runs every Sunday, right? Runs every Sunday. It provides you specific entry and exit points, right? These buy and sell zones. Signal is supposed to last at least 2 weeks, right? 1 or 2 weeks. Sometimes I hold a little bit longer, 3, 4 weeks. And the most important is that across all the services, the idea is to have only 4, especially if you're new to trading. If you're new to trading, to start with only 4 active positions at a time and not to risk more than 2.5% of your account value. Right, so this week, again, Bank of America, some of the banks, Model C's banks in the uptrend, Caterpillar, Micron. These are some of the long signals for this week that were generated on Sunday. And some of them I actually trade, right? So you can go and see Micron, right? So I'm long Micron because I think Micron continues to go higher. And model generated the signal. It continues to make all-time highs, outperforming semiconductors. So that's, if you want to have exposure to semiconductors, this is one place to trade. Chuck, cash secured credit put spread, 600 short strike. I mean, we're not that far from 600, so I'm not sure 600. Oh, 600, the 600. Well, that's pretty far away. I mean, I'm not sure how much premium you can get for 600 strike. I mean, you see the lows, 650, 640. So if you want to do cash secured put, then maybe at these levels, at least it'll justify, the risk you're taking. You can always go into spiders. So you're doing cash secured put, make it put. So I mean, most of the position now is in December. So I would go into December 19. So let's say 605 put, you have $3. I mean, you're not percent, so it might not be not enough to justify the risk. 640, you get in 1% on your money. So 640 makes more sense if you're doing cash secured put. And then you can always go in and look at the probability of success, right? Return if it's flat, return if it's a sign, right? And that would be the consideration if you want to do cash secured put, right? If you set scenario 2 or 1, then selling 640 put makes complete sense. Obviously, if you set scenario number 3, then you're taking the risk, especially in an overbought market. Affect the market, or will it? So James had a question about government shutdown. Right now, you don't really see a big effect, except that we can get the inflation data, we can get unemployment data, and every week that the government is shut down, it does, people are not getting paycheck, it impacts GDP. So the longer it stays, the higher probability that at some point market is going to react. For now, it doesn't have a lot of impact. People are more concerned with earnings and tariffs, but at some point it will. And if they do reach an agreement, it just depends again. Like right now, I think expectation is 45 days, the government shutdown. So if it's done within 45 days, I don't think you'll see any reaction in the market. If the government shutdown goes into, let's say, next year, then at some point market will react. Market will react. It's just not at the forefront of people's mind. So that's weekly power trader, right? You can see same idea. You can buy, let's say, Bank of America. You can buy this week options, or you can buy next week options, or just depends on your trading style. But the idea is that the same thing. You have a buy zone, right, and you have a sell zone for the Bank of America. Any questions on the weekly power trader? So these are the signals. This one particularly gets published every Sunday. Then if you want to see what I trade, right, both stock and option, we do have a weekly power trader. Sorry, dynamic power trader. Dynamic power trader, this is my portfolio. So I have Amazon stock, right? I have Amazon, I have utilities, I have Halliburton Energy, I have technology, Micron, and then healthcare, right? And then I'm using spiders and QQQ to hedge. And you can go into orders and actually see example of both. I trade stocks, so Amazon, I trimmed Amazon position today. Sorry, I added to Amazon position this morning, right? Trying to exit at 228, half of the position. I trim healthcare, right? I've been trading around healthcare. I trim Halliburton, and then I enter Micron position. So it's a combination of stock and option trades. Some of them are short-term trade. Some of them are longer-term trades, but you can see all this information in real time. You can look at my orders, you can look at my positions, you can enter your phone number to get SMS message every time I trade. You can participate in live trading room, right? There's a live trading room recording, and then you can look at the strategy roundtable. Any questions? So that's dynamic power trader. Combination of stock and option trades, and you can actually participate in trades. And we'd also have a live trading room as part of that you can participate every morning. Any questions? Answer. All right, any questions on dynamic power trade? Then earnings power trade, right? We're in the middle of the earnings season, so every week I try to give an example of earnings. This is where I'm looking for outsized returns, right? Where I have a small, well-defined risk, but then I can make, 50%, 100%, 200% return, sometimes, 1,000% return. But these are well-defined trades based on, again, our model. So you have American Airlines, you have Ford, IBM, Tesla. So these are some, and same thing. You could see the orders and position based on the model and the volatility. Sometimes I sell premium, right? If the volatility justifies and the model says that market is going to trade in range, or if you have if expectation of outsized move, like in triple M, right? If you looked at triple M, there was a large demand for triple M options. Then it would make then it made sense to go long, right? You can buy calls, out of the money calls, and this is where you can have these outsized. If you're bullish, you buy out of the money calls. If you're bearish, you buy out of the money, puts to look for these large moves in the market. So that's earnings power trader. And then finally, if you're only comfortable trading puts, stocks, then Profit Accelerator, where you can actually trade just stock positions, right? Any questions so far? Okay. So some of the concepts we cover in live trading room, the economy of control, right? The idea, first of all, it's very important to have a trading plan, right? So if you don't have a trading plan or you don't know exactly how to optimize your position entry, exits, how to deal with risk, right? Mitigate risk. We do have one-on-one coaching program, which I encourage you to consider. If you're looking to, if you have time commitment and financial commitment, then we do have a great coaching program that can help you build trading plan specific for you, right? There's no such thing as universal trading plan. And there could be universal trading rules in terms of how much risk management should be structured. But again, in terms of number of positions or a dollar amount, this is all depend on your experience and your own background. So this is just something to consider. So things that we cover in live trading room and also your custom plan is the idea of, you can't really try to predict what the outcome of government shutdown will be, right? Or when it gets reopened, will the market reality. Same thing with the Trump tariffs. I mean, one day we have escalation, 5 minutes later we have de-escalation. So the idea of the economy control, you concentrate on the things that are within your control, right? This is going back to Stoic philosophy, Roman, Greco-Roman period, where the idea is that you can't concentrate on what other people think or what their actions, but you can concentrate on your own reaction, right? And what, try to not only predict what the stock market is going to do, but try to predict what you will do, right, when the market moves, right? Because we're always stuck between fear of missing out, right? Fear of missing out and fear of future regret, right? You should always consider, if you said 1, what happens if we have, drop below 50-day moving average, or if you said 3, what happens if the market rallies, right? And if the market is up from this point another 5%, or if it's down 5%, or up 10%, down 10%, you want to try to predict what how you will feel, right? So this is, fear of missing out, and this is fear of future regret. Fear of future regret. Regret is, you have these, like in April, you have these sharp drawdowns, and you get a margin call, or you don't have any cash, and these are good opportunities to add to your position, right? You make a lot more money on these pullbacks because eventually the market does come back up, right? Historically, market continues to go higher. So this is a very important concept, and kind of learn what you actually gonna do, right? So that's more of a kind of a Stoic philosophy and the economy of control. Positive, negative visualization, we just did that exercise. I was looking at the end of the year. You can look at the end of this week, Friday. You can look at the next week, Friday, by looking at the options and futures data and positioning. And the goal, so again, position size. It's all about risk management and getting the right number of position size. That is something that, if you're new to trading, I would concentrate from the beginning, kind of making sure that if the trade goes against you, you know exactly how you're going to feel and what you will do. Avoid fight or flight response, right? Right, that's the goal. When market pulls back 10, 20%, you're not panicking. You're making this. You have enough cash to deploy it and use these pull downs, as an opportunity to buy. Especially if you think that AI is here to stay, and we're not at the end of the AI bubble, but we're at the beginning of the AI bubble. So if that's your mindset, then yeah, you're gonna have these drawdowns periodically, but then it's an opportunity to use them to add, right, to your positions. We talked about game theory, right? Doesn't matter what I think is going to happen when when government is going to reopen, right? That's irrelevant. What does the majority of the people think, right? What is the consensus there, right? So you look at the institutional research, you look at other people's opinions. Some of these things are very hard to predict, right? What is the next CPI data? What is the next Trump's tweet? You don't know. But you stay invested. You look at the compounding investment, right? and even tool like a yellow tunnel for optimization, right? For deciding when to enter your position, whatever that position is, deer, right? If you have a predicted low, right, and you have predicted high, and sometimes it's 1%, sometimes it's 3%. So if you can optimize your position entry and exit, and even save 0.5%, it over a long period of time, these small increments, they compound, right? They compound. Risk management, 30% considers 30% of your portfolio to be in cash. We're doing a lot of short-term trade, right? Repeatable process where you can give somebody instruction of exactly how many positions to have, position size, what signals to take, and how to execute your position entry and exit, and just rinse and repeat. That's how you build confidence. This is how you become a more confident trader and more disciplined trader, and that's ultimately the goal. In live trading room, we cover some of the other topics, how many positions to have, how to select expiration months, how to select strike price is important. We talked about just overall market condition, different patterns, right? ABC pattern, and same thing, don't try to call the bottom, look for bottoming process. We're definitely, trading in the range. Now we're on the upper side of the range. Before we were in the low side, lower side of the range. And unless there's new negative information like regional banks, Zion last week, where it's not just a temporary one-off, but systemic issue, then these bottoms usually hold. All right, any other questions? I covered the market conditions, covered the yellow tunnel services, covered some of the important concepts. Again, try to be there in live trading room. We do give 30-day money back guarantee. So you can try any of these services, and for 30 days, basically get risk-free learning experience, right? Ask questions, participate live. If for some reason this is not, doesn't fit your trading style or your goals, we give you money back guarantee. So dynamic power trader, I would start dynamic power trader if you're looking for some large moves or large return on investment, maybe earnings power trader, or if you just want stock trades, profit accelerator. And that's about it. Any questions? Charles, Chuck, George, James, Lalit, Fred, Bob, John, any other questions? All right, guys, I appreciate your time. Thank you very much. Next week, same time, we're gonna have a follow-up. Consider joining, try live trading room 30-day, again, money back guarantee, and you can ask questions and any questions. And then, and then we'll see you soon. Thank you, James. All right, thank you very much. Take care, guys.